Alright, gang. It's your boy Nature, aka Nature. Alright, y'all already know what time it is. You feel me? Like, gosh, y'all. You feel me? I'm gonna be posting. You know what I mean? I'm gonna give y'all everything y'all need to know. You know what I mean? So we already went over a single candlestick pattern. We did double stick candlestick patterns too. Now we gotta do triple candlestick patterns. Alright, so this is what we doing today. Triple stick candle patterns. Alright, so the first triple stick candle patterns you gotta understand is even star and morning star. Alright, so we got even star, morning star, triple black crow, and three white soldiers. You feel me? Plus some two more that we're gonna go over too, which is the head and shoulders and inverted shoulders. They're also triple candlestick patterns that you're gonna see in the market also. So, all right. So the morning star and the even stars, they are triple candlestick patterns that you can usually find at the end of a trend. So these are reversal patterns that can be recognized through three characteristics. Excuse me. So for the morning star, these are the three characteristics. For the even star, these are the three characteristics. All right. So you'll usually find this at the end of a trend. You're gonna find a morning star or an even star at the end of a trend. Morning star you'll find at the end of a downtrend, which is a reversal for a uptrend. And you'll find a even star, even going to night, morning going to day. The sun is going up in the morning, the sun is, going up in the even time, sun's going down. That's how I kind of remember it. So like morning star is going up, even stars is going down. Downtrend for even star, morning star, uptrend. So we use even star patterns on the right. We'll use the even star pattern on the right for this example first. So what you may see. So the first candle is a bullish candle. Bullish means green or white, depending on your chart. If you got green and red, the bullish will be green and bearish will be red. If you got white and black charts, then obviously bullish will be white and bearish will be black. Alright, so the first candlestick is a bullish candlestick, a white bullish candlestick. Bullish meaning it has no wicks on it. You know what I'm saying? Sometimes you might see wicks on it, but really bullish candle has no wicks on it. So alright, so the first candlestick is a bullish candlestick. Alright, which is a part of the recent uptrend. Okay. So the first candlestick is a part of the recent uptrend. The second candlestick, however, is a small body candlestick. Looks like a spinning top, looks like a doji, more like a spinning top. Second candlestick is a small body, indicating that there could be some type of indecision in the market. Remember, spinning tops, really dojis, it looks a little more like a doji. It means indecision. So indecision in the market means it's a reversal is coming. It could be some type of indecision in the market. This candle can be either bullish or bearish. So it doesn't matter. It could be bullish or bearish. Okay, in this example is bullish because it's white. The body is even though it has a small body, the body is still white, and for the even star picture. So it can either be bullish or bearish. But the third candlestick acts as the confirmation that a reversal is in place as the candle closed beyond the midpoint of the first candlestick. So for this to happen, it has to close beyond the midpoint of the first candlestick. So it kind of did close beyond the first bullish candlestick. So it closed beyond the midpoint of the first candlestick. It did close beyond the midpoint of the first candlestick. So this see an even star pattern. The first candlestick will be bullish. The second candlestick will be a doji or some type of indecision, and the third candlestick will be a bearish candlestick. When you see these three form like that, it's an even star. Even star is a reversal. It's a candlestick reversal for a downtrend. Same thing with the morning star. Now I don't know why they don't have the definitions. Like, okay, they don't. Okay, so they're just going to give you even star. So same thing with the morning star. The first candlestick will be a bearish candlestick because it's a downtrend, right? The second candlestick will be some type of small body, some type of indicating that that there's some type of indecision, which you can see. And the third candlestick will be once it go up, when you see these three form, morning star, on a morning star, this is called a morning star. On a downtrend, it's going up. It's a three candlestick pattern, mean it's going to reverse up. So the first candlestick, the first candlestick will be bearish, and the last candlestick will be bullish. Same thing with even start. The first candlestick will be bullish, the second candlestick will be bearish. So all right, so that's just to go over that. We're also gonna go in and dive in a little bit more about it. But all right, let's go to the next example of the triple candlestick pattern that y'all need to understand. So we have three white soldiers and black crows. So three white soldier pattern is formed when there are three long bullish candles followed by a downtrend signals a reversal has occurred. So you're going to see the three white soldiers during a downtrend, and it's a clear signal that a reversal has occurred. So when you see three bullish candlesticks on a downtrend form, three bullish candlesticks on a downtrend form, back to back to back, oh yeah, that's a reversal. That's a signal that a reversal is coming and has occurred. It will be three white candlesticks. The first candlestick will be the second candlestick. The first candlestick will be like small, not all the way small, but small. The second candlestick will be bigger than the first candlestick, and the third candlestick will be bigger than the second and the first candlestick. Same thing with the three black crows. First candlestick will be, I just want y'all to see the pattern, the example. The first candlestick will be the smallest one. The second candlestick will be half the size, or half the size of the first candlestick, and the third candlestick will be bigger than the first and the second. That's for the downtrend now. So this is three white soldier pattern does form during a downtrend, and it will be followed by three long bearish candles. Bearish could be three green candlesticks or three white candlesticks. I use white and black for my candles, so it will be white, three white candlesticks. But for a lot of people, they use red and green. So green will be three green. You see three greens on the downtrend. Come on, that's a reversal. Uptrend's coming. So this type of triple candlestick pattern is considered as one of the most potent in your face bullish signals, especially when it occurs after an extended downtrend and a short period of consolidation. So you're going to see these usually after a extended downtrend, after a long downtrend, a hard downtrend, and after some type of short period of consolidation. Consolidation just means that it's building up. It's sideways. It's not really doing nothing. It's just building up momentum to go back, in the opposite, to continue going back in the direction it was going in, or to reverse and go back in the opposite direction. So in this example, for the three white soldiers, after some type of consolidation, it's a sideways trend. Consolidation means sideways trend, or some type of extended downtrend. You will see a three white soldiers. So the first soldier, the first of the three soldiers is called the reversal candle. It's either the end of the downtrend, or it implies that a period of consolidation that follows the downtrend is over. So when you see a three soldier candle, on a downtrend, it's going to always see at the end of a trend. So you're going to see at the end of a downtrend, or you're going to always see a three soldiers at the end of a downtrend. Okay, it's a reversal pattern that signals that the end of the downtrend is ending in a reversal candle, meaning that the downtrend is over and wants to reverse back up. So for the three white soldier patterns to be considered valid, the second candlestick should be bigger than the previous candle. So in this example right here, the first candlestick, the second candlestick is bigger than the previous for it to be valid. And then the third candlestick, for the three white soldier pattern to be completed, the last candlestick should be at least the same size as the second candlestick, and have a small or the same size of the candlestick, or a little bigger. And it should have no wicks, or it should have no wicks on it at all, or small wicks, very very small wicks. So as you can see in this example, three white soldiers, the second candlestick is bigger than the first one, and for the third candlestick to be confirmed, it's a three white soldier candlestick. The third candlestick has to be bigger, or it has to be the same size as the second candlestick, and it has to be the same size as the second candle, and it has to have small or no shadows. Okay, so the three black crows. So for the opposite, you're gonna see that's for the downtrend. So for the opposites, the three black crows, you're gonna always see it at the end of a at the end of an uptrend. You know, you're gonna see these triple stick patterns at the end of trends. So at the end of a trend, you're gonna see these patterns for these. So three black crows, candlestick pattern of the three white soldiers. So it forms when there's three bearish candles following after a strong uptrend, indicating that a reversal is at works. So, all right, so you'll see it after a strong uptrend. And it's a reversal pattern. It's a reversal triple stick pattern that signifies that that you know the uptrend after you'll see it after a strong uptrend, or you know some type of strong uptrend, and then went to consolidation because it'll go into consolidation, and before you know making this decision if it wants to reverse or continue going up. So the second candlestick, we already know the second candlestick body should be bigger than the first candlestick, as you can see in this example. Boom. Second candlestick bigger than the first one, and then for the three black crow pattern to be completed, the last candlestick should be at least size as the second and should have a small or no shadows. For example, as you can see, it's bigger than the second candlestick and it has small or no shadows, no wicks, no shadow wicks. So, alright, so these are the three, you know, triple stick candle patterns that you're going to see. It's the morning and even stars and the three black crows and the white soldiers. So the three black crow candlestick is pattern is opposite of the three white soldiers. It is formed when three bearish candles follow a strong uptrend, indicating reversals in the works. Second candle body should be bigger than the first candle and should very near its low. Finally, the third candle should be the same or larger than the second candle body and a very short or no shadows. For the three black crow pattern to be completed, the last candlestick should be at least the same size as the second candlestick and have small or no shadows. So, alright. Oh yeah, I forgot. How could I forget? We also have the three insides ups and the three insides down on top of giving y'all the head and shoulders and inverted shoulders. So we can do these. We're gonna do inverted shoulder and head and shoulders too. Let me just do three insides ups and down. So the three stick candle patterns that you know you're going to see also in the market. So these three inside up candlestick formations is trend reversal patterns that form at the bottom of a downtrend. So you're always going to see these at the end of a trend. So so a three inside up forms at the end of a downtrend. So this is a triple stick candle pattern, indicates that a downtrend is possibly over and that a new uptrend has started. For a valid three inside up candlestick formation to be valid, you know, you have to look for these properties. The first candlestick should be found at the bottom of a downtrend. So the characteristics should be a very long or a long bearish candlestick. So the first candlestick is going to be bearish, and the for the three inside up, you know, it's a reversal pattern for an uptrend. You're going to see on the downtrend. So the first candlestick should be bearish. The second candlestick should at least make up all the way up to the midpoint of the first candle. So it should at least make up halfway in the midpoint of the first candle, which it has. It met halfway of the midpoint of the first candle, meaning that momentum wants to go up and then go all the way up, but it met halfway. So it should do that, and then a third above the first candle high. So it needs to so the third candlestick needs to close above the first candlestick, and it did. So boom, that's how you know it's a clear reversal. Clear reversal. Third candlestick needs to close above the first candle high to confirm that buyers have overpowered the strength of the downtrend. As you can see in the example, again, it did overcome the first candlestick. It was higher than the first candlestick, meaning that that buyers have overcome and have overpowered the strength of the downtrend. So conversely, the three inside up candlestick formation is found. Oh, so that's for the three side. That's for the three side up. Okay. So three side up. So three side up. Remember, it's three sides and it's going up. Same thing for the for the triple stick candle pattern with three sides and three inside down. So it's three candlesticks and it's going down. All right. So For the 3 inside down candlestick formation is found at the end of a trend, the end of an uptrend. It means that the uptrend is possibly over and that the new downtrend has started. So for this 3 inside down candlestick formation needs to have the following characteristics. The first candle should be found at the top of an uptrend. So the first candlestick should be the characteristic of a bullish candlestick. So the first candlestick should be some type of white bearish candlestick or green bearish, white bullish candlestick or green bullish candlestick, right? Then the second candlestick, at least, let me make sure. Oh yeah. So the second candlestick should make up all the way to the midpoint of the first candlestick. Did it do it? Did it make halfway to the midpoint of the first candlestick? Yes, it did. But it's a bit, it's a bearish candlestick. It's red. This will be red or black. Black, means sell. Red means, sell too. So it did make halfway for the second candlestick, the point of the first candle, which it has. Then the third candlestick needs to close below the first candlestick of the first candle. The first candlestick, it needs to close below. It has to be lower than the first candlestick to confirm that the sellers have overpowered the strength of the uptrend. Which in this example, the sellers have overpowered the strength of the uptrend. I see is the third candlestick it has closed lower than the first candlestick, and you can see it has. So this is how you can tell, and which means that the candlestick pattern means that sellers were able to overpower the buyers and form a new trend, and which is a downtrend. So these are the triple stick trend reversal patterns. Triple stick trend reversal patterns that you're going to see. You're going to always see these at the end of a trend. Okay. So I try to make it as simple as I could. These are about the these are all the triple stick reversal patterns that you're going to see either on the uptrend or downtrend. So those are basically the triple stick reversal patterns that you're going to see: morning, even star, black crow, white soldiers, inside up, inside down. All right. So 3 insides up and 3 inside down. So, and there's also one more that we want to go over real fast. I'm just gonna type it in actually. And they're called head and shoulders. So we got the head and shoulder candlestick pattern, inverted head and shoulders. They're also triple stick patterns. So you see 3 patterns, 1, 2, 3. Let's see the example. Is the head and shoulders again. Head and shoulders is you're going to see this a lot. You actually see these a lot in the market. Like 85% of the time, you're going to see head and shoulders and inverted head and shoulder triple stick patterns in the market 85% of the time. So, all right, so how do you read this, right? So you got the shoulder, right? Then it drops down, all right? Then makes the head, then it drops down, right? And then makes another shoulder and drops down. All right, so that's the shoulder. You got the shoulder, head, shoulders. So this is a head and shoulders triple stick pattern. So it's a head and shoulder pattern bullish. A head and shoulder chart depicts a bullish to bearish trend reversal signal that is the upward trend is nearing its end, and the pattern appears all the time frames, and the pattern can appear on all time frames and can therefore be used by all types of traders and investors. So it's a bullish to bearish signal trend. So it's a triple stick candlestick pattern that signals that an uptrend is near its end, and that it goes from bearish, and it ends up at the end being a bearish pattern. So like I said, it's a bullish to bearish trend. So you're going to find this during an uptrend, as you can see in this picture right here. Let's go into images real fast. As you can see in this picture, you're on an uptrend. Okay, It's going to do that. It's going to go up, make its shoulder, drop back down, go up, make its head right there, drop back down, and then it'll make it like a little. It'll make another drop, because it has to make the shoulder, right? This kind of be like the neck, and then it'll make the shoulder right here. Sometimes the shoulder, sometimes it'll consolidate before it make that last shoulder. As you can see, it had to consolidate at the bottom right here. And then the shoulder's all the way over here. Once it makes that last shoulder, oh yeah, it's going down. So you're gonna see this on the uptrend, and here's the neckline. It was the uptrend. That's the neckline. You got the neck, you got the shoulders, the head, the shoulders, the neckline, uptrend. So this is a head and shoulder reversal pattern. All right, so let's dive in a little bit. That's actually let me show y'all before I even dive in. Let me just show y'all inverted head and shoulders pattern. That's see this. You see a head and shoulder candlestick pattern on an uptrend, and it's a bearish reversal pattern. So it's a downtrend reversal pattern, and you see an inverted. Type in inverted head and shoulders. You see inverted head and shoulders during a trend, and it's a bullish reversal pattern. I mean, it's an uptrend reversal, triple stick uptrend reversal pattern. That signals that the end of a bearish trend. It's a bearish to bullish reversal pattern. So is a reverse head and shoulder bullish? Yes. A true head and shoulder pattern doesn't occur very often, but when it does, many technical traders believe it indicates a major trend reversal has occurred. A standard head and shoulder pattern considered to be a bearish setup, and inverted head and shoulder pattern is considered to be a bullish setup. So there you go. Bullish means up, so it's a bullish setup, meaning that it's a triple stick bullish pattern, meaning that it's a beginning. It wants to go up. It's an uptrend pattern. So what happens after an inverse head and shoulder pattern? Considers an inverse head and shoulder pattern is comprised of three component parts. After a long bearish trend, the price will fall to a drought. It's called a drought, and then subsequently rise to form a peak, and then the price will fall back again to form a second drought simultaneously before initially it lows rise again and yet rises up again. So it's going to do it 3 times before it goes back up and rises up to the top for a uptrend pattern. So those are the 3. These are all the triple stick candlestick patterns that you need to know about. Is head and shoulders, inverted head and shoulders. Like I said, I read a little bit about it for y'all. I'm gonna show y'all an image of the inverted head and shoulder pattern for y'all real fast, so y'all can have that. Here's the neckline. Okay, you got the shoulders, you got the head. Here go the other shoulder. Boom, and there goes the breakout to the uptrend. All right, so you can see the shoulder right here. Boom, it made the head. Boom, made the last shoulder up to the uptrend. So it's so inverted head and shoulder is a uptrend reversal pattern, bullish uptrend reversal pattern. So those are all the triple stick candle picks that y'all need to know of. All right, so gang, it's your boy Nature, aka Nation, gang.